Hey traders, what's going on? Jamie Saettele here. It's June 24th, 2015. Purpose of this video is to kind of summarize the midweek strategy webinar. I actually screwed up with the recording of it, and this might even be better. Who knows? A little shorter to the point. Um, but there were, a couple main topics that I covered today with with the members that were in the midweek strategy webinar. One was just the US dollar, right? I mean, we were looking at obviously the slope that was presented last night. We seem to have gotten pretty good response off of that. This sliding parallel here, this is really a critical level because look, if we break out above 1188.6, okay, the next level of resistance probably isn't really until 11,950 or so, which would be the next, kind of the next confluence, if you will. So, this level is big, not just from the slope standpoint, but remember, we've got the February high here. Um, you've got March 18th, that initial Fed day kind of, dollar flash crash, so-called. You got that low there. You got some consolidation around early May, and everything. So there's a lot here, okay, to influence for a pullback. And by the same token, if you go through it, it's awfully important. It's awfully important resistance break. So the other big topic, or one of the other big topics I focused on today was dollar yen, and this basically speaks to the importance of where the U.S. dollar is, speaks to where the dollar yen is right now, obviously. Remember the COT observation that I had made several weeks ago, is last week, I'm not sure, but this red line here indicates the number of contracts that were traded, okay, or changed that week. So when you have a really low number, it indicates that speculators sold a bunch of contracts. So their trade for that previous week was net short, and spec in commercials, their trade was net long. So when you have a really low number, or the oscillator is really low, it just means that speculators sold a ton, commercials bought a ton, and that could indicate exhaustion, okay, on the downside. And in this case, that would mean exhaustion on the upside for dollar yen. So the fact that we had a reading of minus 87,000, we've only had that reading several times in history, tells me that we may very well see a much larger turn in dollar yen and yen in general. And you can see that the previous instances of this, you've seen some pretty solid moves towards yen strength. After you've gotten this reading. Okay, so that's something to really pay attention to going forward. And obviously, technically, the way we're trading it here, we're currently short dollar yen. I'll look at the daily and the short-term stuff in just a second. But this is a monthly chart, and I just wanted to point out, the massive confluence that we have. This is a trend line that goes back to the 1990 high, as well as the 1998 high. Okay, and then this is 95 and 2005 lows, and here we are 10 years later, 2015. So this confluence, the break above it, got a lot of people excited, but it would be just as bearish on the other side if we were to put in something like a monthly reversal candle here and close somewhere down here. So that's something to keep in mind as we move forward into really, the end of June next week. Then the daily chart slope has been altered a little bit. We've moved the pivot from the 6.2 low to the 6.3 low. It does describe price action a little better as it's evolved. So again, month open, the stop so far seems safe. 120, or sorry, what was it? 124.43. Our stop's 124.50. In order to get aggressive on this, we need to break down below this median line, obviously. You've got 122.94 week open in the way. Going in the near term, short term stuff, I've got this highlighted, this 123.37 area. That's really the biggie. We need to get below that. That's the post-FOMC close. It's a huge volume area. A lot of trade was done there. If you get below there, I think, it's kind of home free on the downside. And that's at a point that I would look to, to increase the short position at that point. Until then, it's up in the air. It's still iffy. Um, as far as the short side on dollar yen's concerned. Not like the upside's good either, just, not sure if we're going to get a move. Need to get below that 123.37 area. So that's where we are with dollar yen. Also on this dollar yen, we've had a massive divergence between the Nikkei and dollar yen. And here's Nikkei futures. We're trading at, maybe multi-decade highs in the Nikkei index right now, but we are putting in a reversal bar today. So that's interesting to note because dollar yen obviously is nowhere near any sort of reversal bar. Okay. Um, it's because we're not trading anywhere near the highs. Dollar yen's nowhere near the highs. So we've got, dollar yen failing near the month open price. 124.10, pulling back, and then you've got a big reversal day here in the Nikkei. This thing could really fall apart in a hurry. You do have giant, important, potentially devastating divergence in the way here. RSI 65 here at the price high, right? Those are ones you actually pay attention to, as I've mentioned on many previous occasions. Okay, and just think about this, even within, again, the confines of a bull market that's been going on for some time, even a pullback, the first support probably is former resistance, which is this line, this upper parallel, which was resistance here, which was resistance here, okay, and that wouldn't be until, probably at least close to 19,000, which is close to 2,000 points lower in the Nikkei, all right? That would be the first big support, okay? So if we get a pullback of that magnitude, then you can bet dollar yen is going to be a lot lower. And on that same token, dollar yen, even within the confines of a major bullish trend that we've got going on, even a minor pullback is 119. Even a normal pullback, still the lower parallel is probably 114. Okay, so there's plenty on the downside here as far as reward to risk is concerned. The other big thing I focused on was Kiwi, right? And I like the way Kiwi's acting here. The lower parallel that we've talked about, downtrend support. By my count, we've touched this thing 7 days now over the last 2 months. Each rally that we have had, and we've had some pretty sharp ones, has been from this level. So that could very well happen now. Again, first resistance, the median line, probably near 69.40 over the next day. You get over there, then you're talking about the larger, bigger picture median lines, which is above 70. Looking at the short-term picture here, was highlighting this earlier on Twitter. We do have a solid bullish slope to work with. You can see that the market's actually adhering to it very well. Sliding parallel this morning, even this thing right here, look at that. Boom, boom, this is just now. Okay, so I would be watching for support on this line because it has gotten the last 2 solid lows as far as entries are concerned. 68.52 was yesterday's close. Watch for this line now, wherever it may be, if the price gets to it. Okay, so this is obviously of the much more shorter term variety. There's obviously not enough in the book to say that the Kiwi's made some sort of a major low, but it's certainly possible. You can't have a major low until you had a minor low. So that's what I'm working with here on Kiwi. But yeah, watch the median line and this sliding parallel for New Zealand dollar, for some sort of support, okay, to take it higher. Just traded into the week open, actually. On Kiwi, we have some interesting crosses, obviously. And, most notable, of course, is pound Kiwi, right? Which has been just a giant beast. So here's the weekly chart. We actually do have an upper parallel at this level, okay? Even a pullback within this breakout level could reach this median line, and this sliding parallel former resistance could become support. Even over the next few weeks, that probably is 217 or so. So you could see a pullback at 217 and still be within a big bull move. Not out of the question. Near term, if there is something bearish to work with, watch this slope here, okay? 60-minute chart, 617 high, or actually 618 high, 618 low, 623 high. Okay, I'd watch this level here. That's the sliding parallel. And again, something that I advocate doing as far as just providing yourself with some objective look at, let's be honest, slope drawing can be it's subjective, right? You're the one doing it. But if you throw some moving averages on there, I like 24 and 120 on an hourly chart. That's 1 day, 5 day. You start to get a sense for changes in trend. And this is the first time in a while we've obviously seen a cross in the 1 day below the 5 day, 24-hour below the 120-hour. A lot of times after that first cross, you will get a pullback into it, okay? And that's your chance to make a move. So watch these slopes. I'd watch this level, former lows here, line up with slope tomorrow. It's about 229. 229, you'll probably have moving averages around there at that point. So just, a heads up, basically, on possibilities of a pound Kiwi short at some point. Me personally would like to play it through Kiwi dollar. This thing's a little too much for me, pound Kiwi is, but it's there, so I'd like to point it out. Okay, the possibility of a broader reversal is still there. Finally, another one to look at is pound yen. Okay. Now remember, pound yen, for the first time, at least since 1998, because my data does not go before 1998, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive up days. Okay, consecutive ups. The most we had before was 8, and that was right here at the last week in 2013, and we promptly fell, top the next week, and then fell from close to 175 to 168 in 2 weeks' time, and eventually down towards 164. So this thing, by this count's extended, by the fact that you've got these upper parallels up here, obviously extended. We are putting in a J spike today. Again, a J spike here today. We put one in here the day of the low back on 414 as well. So we've got that going for us. If you look at the very short-term picture, you can see that this appears to have resolved a massive uptrend, at least for the time being, with a very tight triangle and a thrust to a new high, and it was barely a new high, but we have come off now, and this is your slope that you want to work with right here, okay? So you've got slope to work with on the downside. Even a double top target from just this puts you at 192.84, okay? Again, the moving averages, I would watch these. Watch the week open price, which is 195.15. This is something I would be willing to trade just because we've obviously had, pound dollar itself come off of very extended levels. And we had a big slope confluence. You can see it on the long-term charts, I'm sure, if you look at that page. So, in general, 195, 195.20 or so could be a very interesting level to get short pound yen. I'll do some more work here with it and should have something up in the post tonight. But that's it, really. I did want to just point out some of those bigger developments so that you had them if you missed the webinar today. Apologies for not having it archived, but these were really the main points I did touch on, okay? And this is what I think is the most important to look at as we move forward. US dollar resistance, but really such a huge level. The next few days, ideally, give us some sort of clarity as far as the dollar is concerned. Dollar yen, obviously hope it's lower because dollar yen, we are short, and there is the potential for, again, a very massive repricing there. Pound yen starting to roll over with the reversal bar and everything else. Kiwi dollar, interesting in that it's reacted again at the lower parallel. Watch for that short-term slope, on those markets I just mentioned, Kiwi dollar and pound yen, and pound Kiwi if that's your thing. Okay? Oh, and the Nikkei, right? Hand in hand with dollar yen. If you start to see a repricing in the Nikkei, then dollar yen's not going to dismiss it either, right? We've had quite a divergence there for a while. It might be time for the markets to rejoin as we move into July. All right, so that's it. Again, take care. Jamie Saettele here with SB Trade Desk with your midweek strategy webinar summary, and good luck.